If you think debt is bad, then you're absolutely wrong, because billionaires make money with debt all the time. The first thing billionaires do is build empires. Your business is your empire. Like many entrepreneurs, you start small and dream big. Limited funds is oftentimes the biggest hurdle we entrepreneurs encounter. This is where strategic debt comes in. I mean, look at Jeff Bezos. He kickstarted Amazon with a $200,000 loan from his parents. From a garage out in Seattle, Washington, to doing $20,000 in sales within the first month. Bezos was eager to keep growing his empire. He saw potential to expand into online movie sales, so he strategically took on more debt to make Amazon's first acquisition. Amazon had purchased IMDb for $55 billion. Wrldwide.com reported that IMDb's annual revenue is $215.8 million today. Talk about a return on an investment. Bezos continued to build his empire and invest in fulfillment centers, technology, and acquire more competitors. This debt-fueled expansion allowed Amazon to offer superior selection, convenience, and prices. Today, Amazon is worth about $1.5 trillion. The key to Bezos' success was simple. He strategically used debt to fuel his company's growth and stayed committed to repaying the debt. By constantly borrowing and repaying debt, you would then have established a great relationship with the banks. Having a great relationship with the banks would then open up new doors to financial opportunities and resources. This is why billionaires generate liquidity. Take Mukesh Ambani, for instance. He is the chairman of Reliance Industries. His net worth is currently $100.7 billion. Mr. Mukesh owns properties all over the world. Hell, his home in India itself is worth $2 billion. But why are we talking about how much this guy has? Because in April of 2023, Mr. Mukesh borrowed $5.5 billion for a nationwide 5G rollout in India. I know what you're thinking. I was thinking the same thing. Why he didn't just sell one or two of his properties and pay for the 5G rollout instead of getting a loan? Well, he borrowed the money because he wanted to leave his assets to his 3 children. By Mr. Mukesh being an expert in the field, he knew that this 5G opportunity was once in a lifetime. This 5G opportunity would give Mr. Mukesh the potential to power 2% of India's GDP by 2030. By implementing 5G could result in an economic growth of $180 billion. So why not borrow the money now and pay for it in 5G profits later? Quick question. Did you know Mark Zuckerberg is Meta's lowest paid employee? Yep, billionaires get paid a $1 salary. Mark Zuckerberg pays himself a $1 salary to avoid paying taxes. He also receives a massive amount of Meta stock as a company's bonus. Instead of selling off shares for money, Zuckerberg just uses a small portion of his stock as collateral for a loan. Doing this allows him to skip out on paying capital gains taxes for selling shares. Since debt is virtually untaxable, everything works in his favor. Imagine Zuckerberg receiving a loan at a 5% interest rate. Zuckerberg just has to make sure his stock surpasses a 5% gain. He uses the gain to pay the previous loan off and gets another loan. I wonder, did he get that loan in his name or his business name? This question leads me to my next thing billionaires do. They don't mix up their money. Elon Musk borrowed $13 billion to buy Twitter. Even though his net worth was close to $250 billion at the time, Elon did a deal called a leveraged buyout, or LBO. In an LBO, the borrowed money is secured against the assets of the company being acquired, which in this case was Twitter. This means that lenders lend money in expectation that Twitter would be profitable and its future profits will pay off the debt. If Twitter makes money, Elon will enjoy a large share of it. However, if Twitter fails, Elon's risk is limited to the equity he owns in it. The lenders can't ask Elon to personally pay off the debt. They can only recover the loan by selling Twitter's assets. By borrowing money, Elon ensured that his personal assets are secure and all of his businesses maintain their separate legal entities. Lenders can't ask him for money if Twitter fails, so Elon basically bought a company with no money down. Speaking of no money down, I bet you don't know why billionaires are real estate kingpins. Billionaires borrow money to buy multiple houses across the world, and the surprising part is they don't even live in them. The biggest reason is because leveraging debt in real estate can be more tax efficient than using cash. Debt can lead to tax deductions, particularly through interest, expense, and depreciation. Let's just say you find a property worth $250,000. You borrow 80% from the bank, you contribute 20% yourself or from investors. Suppose your annual debt service is $12,500 and your maintenance cost is another $2,500. This would be a total of $15,000 in expenses. But if you rent out this property at $18,000 annually, you're earning $3,000 without using any personal funds. The tax benefits come into play with depreciation. Real estate allows this accounting method reflect reflecting on the property's wear and tear. It's not a cash expense, but a paper one. Using the industry standard depreciation rate of 1/39, you can write off approximately $6,410 each year. This depreciation often surpasses your actual income from the property, leading to a paper loss for tax purposes. In this case, a loss of $3,410 while you still have $3,000 in real cash profits. Billionaires use this strategy to expand their real estate empire, turning debt into a tool for wealth growth and tax minimizations. It's a numbers game where understanding and applying these financial principles can transform real estate into a powerful wealth building machine.